so you haven't filed your taxes in years. Maybe something happened one year and you didn't file. Maybe you were in the hospital, or you were afraid to file because you didn't have the money or just never got around to it. The next thing you know, 1 year becomes 2, then 3. Before you know it, it's been 10 years. But how many years of tax returns do you need to file? The most recent? All of them? How far back does the IRS want you to go? That's the topic of today's video, on the other side of the intro. What's up, everyone? Adam here from Legacy Tax. We are the premier tax resolution firm in the United States. We've helped thousands of clients with unfiled tax returns, back taxes, tax liens, and of course, IRS levies. You don't have to fight the IRS alone. You can reach us at 1-877-538-9546. You can also check us out online. Go to www.levyking.com. We've also put out a free ebook called End the Tax Nightmare: Insider Secrets to Beat the IRS and Reduce Your Tax Debt. Inside the book, we'll show you how to stop IRS levies, liens, and garnishments without paying the tax in full. How to set up the payment plan that you want and not the one that they want. How to potentially settle your tax debt for less than you actually owe. Our book has been a top seller on Amazon for years, and you can buy it right now for $19.99. But I want to give you a copy of the book absolutely free. Just go over to our website, www.endthetaxnightmare.com, and enter your name and email, and we'll send you a copy right away. No charge. Not even for shipping. Totally free. Before we go any further with the video, please take a moment to subscribe to our channel, and don't forget to smash that like button for the YouTube algorithm and hit the notification bell so you'll get a heads up each time we drop a new video. Okay, let's dive into today's content. Meet Rick. He's a long-haul truck driver. He's paid via 1099 with no withholdings for taxes. He had always filed his tax returns on time, until 10 years ago when he was going through a divorce, battling cancer, and his trucking business was suffering. The bills started to pile up, and filing his taxes took a backseat to daily survival. A year or two became 5 or 6. Before you know it, getting caught up on his taxes was an overwhelming task that he couldn't manage to get a handle on. So here's a snapshot of Rick's current situation. He owes the IRS over $75,000, including penalties and interest. We can see that for 5 of these years, the IRS filed his taxes for him in the form of a substitute for return, also known as an SFR. We can say a lot about the SFR, but long story short, the result is a balance that is greatly inflated compared to what it could have been if Rick had filed his own tax return. For a better understanding of the SFR, check out this video. So Rick went to a tax attorney who said that he needed to file all 10 years. After that, he called a CPA who said that he should only file the previous 3 years. But who is correct? Does he have to file all 10 years, or does he only need to file 3? Technically, the tax attorney is correct when he says that Rick is required to file all missing tax returns. Under 26 U.S.C. Section 7203, any person who is required to file a return but willfully fails to do so is guilty of a misdemeanor punishable by a year in jail. But even though you are technically required to file all tax returns, the IRS has decided that it will limit the number of unfiled returns that it will enforce. This is for practical purposes, as it would be too much trouble to require the filing of all tax returns back till the beginning of time. So if we don't technically have to file all tax returns, exactly how far back are we looking? The answer can be found in the Internal Revenue Manual. Generally speaking, the IRS considers a taxpayer to be in compliance if his tax returns have been filed going back at least 6 years. Section 4.12.1.3 of the Internal Revenue Manual states that the enforcement period for filing delinquent tax returns is not to be more than 6 years. However, the extent to which delinquency procedures will be enforced will depend upon the facts and circumstances of each case, and by reference to factors ensuring even-handed administration of staffing and other service resources. So if you're watching this video in 2024, you would need to file tax returns for 2018 through 2023. There are some exceptions to the 6-year rule. The IRM states that enforcement for longer or shorter periods may be used when consideration has been given to the taxpayer's prior history of non-compliance, the existence of income from illegal sources, the effect upon voluntary compliance, the anticipated revenue in relation to the time and effort required to determine the tax due, and finally, any special circumstances existing in the case of a particular taxpayer, a class of taxpayers, or an industry, or which may be peculiar to the class of tax involved. If you're in doubt about whether these factors apply to you, it's probably a good idea to consult a professional to help you determine exactly which years you need to file. In Dave's case, 2016 and 2015 were SFRs, so technically those have already been filed. But this brings me to my first example of why you might want to file more than the required 6 years of tax returns. Rick might want to file an original tax return to get rid of a substitute for return. As we said earlier, an SFR will produce an inflated balance, and since Rick has several years of SFRs, his balance is really inflated. He might want to file an original returns to reduce his debt, even though it's outside the 6-year minimum requirement for IRS compliance. Another reason you might want to file an original return is to start the clock counting down toward your collection statute expiration date, or CSED. The IRS has 10 years to collect back taxes. Any debt that is uncollected after your CSED date is essentially forgiven. The issue is that the clock will not start running until the tax returns are filed and the balances are assessed. If you never file the returns, the clock never starts running. Yet another reason to file has to do with Social Security. In order to qualify to collect Social Security, you have to have worked full-time for at least 40 quarters, or 10 years. Your tax returns are used to determine whether you've met this requirement. If you're self-employed and you haven't been filing your tax returns, you may run into problems when you're 65 and you go to collect Social Security retirement benefits. In summary, while you are technically required to file all tax returns, the IRS policy is to only enforce the filing of the previous 6 years. So if you have 10 years of unfiled returns, you can probably get back into Uncle Sam's good graces if you file the current year plus the previous 5 years for a total of 6 years. However, there are several reasons why you would want to file unfiled returns even when they are outside that 6-year minimum. You should consult with a tax pro to help you determine the best strategy to solve your problem and deal with your tax debt. Speaking of tax debt, I want you to know that there are special programs in place to help you get a fresh start. But how do you know if you qualify? No two cases are exactly alike, so how do you know exactly what your options are? Well, I've created a free tool to help get you qualified for a fresh start. Just head over to www.levyking.com or click the link below. Follow the prompts and answer a few simple questions and we'll help you figure out your eligibility. That website again is www.levyking.com, or you can give us a call at 1-800-775-389-546. That's it for this week. Talk to you later.